Hi friends, Marcela Penaranda here, and today we will be talking about the steps to buy a property. Now this one especially applies to anyone who feels like throwing away money every month for rent and would like to build some equity, or to anyone that already have a property but would like to acquire a next one and need to apply for some financing. If you are in a point where you can buy in cash, I will discuss in the next video the different options that you may have, whether it is for investment, for commercial, or for a primary home. Now, going back to financing, everyone goes to a very similar process and it requires some financial preparation on your part. Now, let's begin with that planning. Number one, saving for a down payment, which is one of the first things to get you started to be able to buy a home. Unless you're eligible for a zero down payment, military, the veterans, or the VA loan, chances are that you may need some percentage of that home's total value in cash. How much exactly? Well, it really depends on many factors, but I have seen mortgage programs starting at 1% down payment with a good credit score of 700 and above. There is also the 3.5 for FHA loans, which is the government insured mortgage program with credit score of 580. And also I have seen the very well-known 20% down payment. And I know saving up money or bringing in more money can be very challenging and even more time consuming, but it's important to get you started on that phase early. If you would like to move faster in your savings, you can always consider using money from your 401k or your IRA account if you have one. That, by the way, it won't charge you any penalties when you take your money for a first real estate purchase. Number two, review your credit score. Lenders will use your credit score to determine whether or not you are a safe borrower or if you're more likely to be a risk to them. So getting your credit score in order is one of the most important steps that you can take towards owning. By working on your credit report early, you'll not only get your score, but also you have plenty of time to review for any errors and have the time to dispute them if necessary. Minimum credit score requirements are about 580 for FHA loans and 620 for conventional loans. So if you discover that yours is lower than that, you'll have the time to work on it and bring it up so you can qualify for the loan. And since checking your own credit score, that's considered a soft pull, you can request it and it won't hurt your credit. A higher credit score could also help you getting a better interest rate and lower down payments, as we spoke earlier, remember? Now, so the earlier you work on improving your credit score, the more you could save in the long run. Number three, stop making big purchases unless you really need them. Why? When buying a house, you need to show lenders that you're financially stable to get approved for the loan. In general, lenders won't like to see a lot of big purchases. So if you can wait a little bit, buying that super new TV or changing your car, you might help lenders see you as a lower risk borrower. Also, try to avoid opening up new lines of credit. Multiple credit lines can indicate that you may not have the money that you say you do, and lenders could be less inclined to actually approve you for the loan that you want. 4. Use calculators to see what you can actually afford, and that's one of the easiest ways to get an idea of how much you can afford before you actually go through the pre-qualification process. You can find plenty of them online. You just need to plug in your information about your income, your monthly debt, and down payment information to figure out how much you could realistically afford, as well as how much your monthly mortgage payment will be. Number 5, get pre-qualified, and that's the step that will really tell you how much you qualify for, or even if you're eligible for a loan at the moment. So you can start the searching process within that price range. In the pre-qualification process, a lender will review your income, your debt, your assets, and other details to tell you how much they will be willing to lend you. If the lender happens to uncover any red flags, you'll get a clear picture of what the steps you need to take in order to improve them and qualify for that loan that you want. Now, if you're going through a pre-qualification early, it will help you ensure that you have enough time to fix any issues before you loosen a good deal. And there is an extra tip. Sometimes lenders will provide you with a pre-qualification letter without doing a hard credit pull, so it won't hurt your credit. And also, you're not obligated to work with that same lender that you got pre-qualified, which makes no risk to see where you stand. Once you get that pre-qualification done, you can actually move quickly and make an offer as soon as you find your dream home, and the sellers and the agents will take you more seriously. It will show agents that you're organized and fully prepared to be a buyer, and you will be approved when finding a house. Now, if you have any questions about your case specifically, just send me a message or call me, and I'll help you figure out what the best solution is for you. For now, you guys have an amazing day. Stay productive. Ready, set, go.